perceive FOMC and how you can trade it. So check this out. First things first, you want to make sure on your chart you put a vertical line at 2 p.m. Eastern Standard Time, because this is when FOMC releases. Next thing, make sure that you're on a 30-minute time frame. You have to be on a 30-minute time frame. Now here's the strategy. We've now reached FOMC. There's the release. I'm going to delete this off now as it's in the way. And there's your FOMC candle. Now you're going to mark the high and low of this 30-minute candle, and using a Fibonacci retracement tool, you're going to go ahead and locate the 50% mark of that candle. It'll look like this. You have your FOMC high, your FOMC low, and then you have your 50% mark. Instead of hoping how the news is going to perceive this range, what we're going to do is treat this sort of as like a no zone. Okay, this is a chop city. You are going to get chopped up if you try to play in this zone. What you really want to do is try to do this, where you target when you close below the FOMC low. Instead of worrying about the market's forecast or how the news perceives everything, this is how New York, London, and Asia will tell you. And when you get these 30-minute closes below that line, we expect a harsh rejection from the market. And once you get candle closes above the FOMC high, we then expect markets to do this. Everything on a 30-minute time frame. All right, you ready? Let's let some candles play out. Notice every one of these candles, look at the chop that I just talked about. That playing in this zone can be very difficult and very fast, and it's designed to chop you out. We want to see candles close down here on a 30-minute to ride it down, or candles that close up here to ride them up. And there we go. This candle right here was our very first 30-minute close outside, which means you want to look for those shorts that we talked about. Set your stop at the 50% mark. And now, look at the next candle, how it has a perfect back test, but our target's going to be way, way lower. This is the market saying that FOMC is way too expensive. Watch what happens now. Do you see how that works? The trick is to wait for a 30-minute close outside the low or outside the high, setting a stop slightly above it, and then you can ride how the markets really perceive FOMC. And now here's example 2, and let's see how quickly we can do this together. There's your FOMC mark, 30-minute time frame. And there's FOMC. There's the close. I'm going to close this. I'm going to add the top, bottom, and middle of the candle, and it looks just like that. This is your no zone. And what you're going to do is wait for 30-minute candles to close underneath here, and you're going to ride it down, or you wait for 30-minute closes up here, and you're going to ride it up. There's your first 30-minute close. Our trade's been activated. Look at the perfect back test, by the way. Perfect back test confirming resistance. And now let's watch it dump. And there you go, folks. That's how you can look.